Welcome to this video. MSL here. In this video, I have one promise to make to you. If you stay with me through to the very end, you will understand control accounts through and through, guaranteed. So I will use a fully solved past exam questions to teach you control accounts, and you become an expert. There's no control accounts question that will beat you in any exam anywhere in the world ever. Impossible, right? So let's go through this. So this is a past exam question on control accounts. Before we start, what we say control accounts are about, just take this as the meaning for now. Control accounts, as the name implies, are really a mechanism for us to check a certain system to see if everything is working as it should. So control accounts are just another measure, another mechanism in place for businesses to check that the correct accounting is being done, that errors are kept at a minimum. So we have another video on the correction of errors. So control account is another measure that companies use to check that the right thing is being done, that we have kept errors in a minimum, and then everything that is supposed to be in place is working. Now at your level in exam, typically the control account you'll be examined on will be two main ones, which we'll call the receivables ledger control account, or the second one is the payables ledger control account. Take note that some people call the receivables ledger control account the debtors control account, and some call the payables ledger control account the creditors control account. So in an exam, if you see debtors control account or you see creditors control account, just know it's the same as what the receivables ledger control account, the same as what the payables ledger control account when you hear creditors control account. Enough of all of this, not too relevant for us now. All we need to know is that, back to the question here, I'll show you how to prepare control accounts. I will use two questions. By the time we've done both questions, trust me, there's no question that can beat you. So I'm going to use two questions to teach you control accounts, and no question on the face of the earth can beat you when it comes to control accounts. Take my word for it. So let's start. The first one, they are saying at the close of business on 31st July 2019, the following balances were extracted from the books of Kwabena Limited, a limited liability company. Then we come to the requirements. Required, prepare the receivables ledger control account and prepare the payables ledger control account for the month of August 2019 and determine the balances as at 31st August 2019. So we need to prepare two things: a receivables ledger control account and a payables ledger control account. So let's start. What are control accounts even? What do they look like? They are simply T accounts. So this is the A part. So all I need to do is what? Open a huge T account. Then come here, open another huge T account. So I call this my receivables ledger control account, and I call this my payables ledger control account. Good. Now let me make life easy for all of us. The receivables ledger control account, see it as an accumulation, a summation of all your receivables. Or to even make life easier for you if you're a beginner, see the receivables ledger control account as a summation of all your debtor balances, all the people who owe you. So if as a business, you have 14 different people, let's even use a nicer figure, you have 20 people who owe the business. When you sum up all their individual debtor accounts as the people who owe you, the sum should be what you find in the receivables ledger control account. Because don't forget that the receivables ledger is an accumulation of all your receivables. The payables ledger is an accumulation of all your payables, all the people you owe, your creditors, as some people call them. So remember that in business, we have three main types of ledgers. So we have something that's a football team, so you can even use PSG to remember. We have a purchases ledger, we have a sales ledger, and we have a general ledger. The purchases ledger, as the name implies, includes what? Or it encompasses all your accounts or your dealings with what? Persons you have dealt with by way of purchasing. So people even call the payables ledger control account as what? The purchases control account or the purchases ledger control account. Then the sales ledger control account will include all those you have sold to. So here, all the people you've sold to will be under your sales ledger or your sales ledger control account. Then the G will be the general ledger. That will include all other balances, all other accounts like depreciation, all of those other things will be under general ledger. Even that out of the way, the point I'm making is that the receivables ledger control account, see it as a mirror image of your debtors account, of your receivables account. If that is the case, we know that all our debtors or our receivables will have what? A debit balance. All our creditors or our payables will have a credit balance. What do I mean? Debtors or receivables, they are your assets as a business. They are assets because they owe you money and they'll pay you money in future. So you get something from them. I'm explaining this at a very fundamental level. So if you're an advanced person watching, don't worry. Your debtors or receivables are your assets because they owe you money and you're expecting something. In technical future terms, we're using the term, you expect a future inflow of resources from them or a future inflow of cash from them. So debtors are debits. Luckily, the name is debtors and the corresponding is what? Debit. Creditors are people you owe. They are your liabilities. And we know all liabilities are credits. So your creditors are credits, your payables are credits. If that is the case, can we safely say that the receivables ledger control account is effectively going to have a debit balance? Do you agree with me? So this one right here, receivables ledger control account, will have a debit balance. And then the payables ledger control account will have a credit balance. Agreed? If that is the case, then let's come back to the question. They said that what? The following balances were extracted from the books of Kwabna Limited for what? Receivables ledger control account and payables ledger control account. So if you come down here, they are saying that prepare it for what? The month of August 2019. If you come here, the balances we had were what? As at 31st July 2019. So it means that these accounts, these figures here, the 47,600 and the 37,400 will be the opening balances. If we have established that the receivables ledger control account will have a debit balance and the payables ledger control account will have a credit balance, then let's call the balance, nope, not this. Let's call the balance brought down of what they said receivables ledger control account, the balance of 47,600. So let's put the 47,600 on the debit side because I'm saying receivables ledger control account has a debit balance. Then the 37,400 will be on the credit side of the payables ledger control account. So my balance brought down will be 37,400. Some people like to use balance brought forward or whatever, but feel free. Right? So this is how you place your opening balances. Now that you know this, you are saying during the month of August, the following transactions occurred. Once again, remember I told you that you should see the receivables ledger control account as a mirror image of your debtors account, as a mirror image of your receivables account. And in the same vein, you see your payables ledger control account as a mirror image of your creditors account or your payables account. If that is the case, any transaction you see here, just in your mind, do a quick double entry and ask yourself, what will I debit? What will I credit? Let me show you. So for example, cash received from customers. If you sell to a customer and you receive cash, what will be the double entry? You agree with me that what? You would debit cash and then what? You will credit the customer's account to reduce their amount they owe you. So let this be the customer's account. Let this receivables ledger control account be the customer's account. So if they say we receive cash from customers, in my head, I will debit cash and then I will come and credit what this account with what 31,800. Then all I'll do is we'll just write the exact thing the question gave you. So cash received from customers. I'll take that again. Whatever transaction they give you, in your head, just do a quick double entry. If you are dealing with the receivables ledger control account, let that represent the debtors account or the receivables account, and then let the other leg of the transaction be what the question says. If it is dealing with the payables ledger control account, let the transaction in the question, the double entry you quickly do in your head, be between that item and the creditors account or the payables account, and you are safe. Look at the next one. Cash paid to suppliers. If as a business you pay cash to your suppliers, what would you do? You agree with me that what? You will credit cash when you pay them, and then you debit your suppliers. In this case, what? Your payables or your creditors. Agreed? If that is the case, then I will come here, cash paid to suppliers. In my mind, remember I said I will credit cash, then I'll debit my what payables or my creditors. So I just come here and say cash paid to suppliers. How much was it? 32,500. Are we following? Very straightforward. Next is what? Let me use this. Sales on credit. When I sell on credit, what is a double entry? When you sell on credit, remember, you credit the sales account when you sell, and then you debit the receivables account or the debtors account. Agreed? So if I will credit the sales account and I will debit my receivables account, then I'm saying that this account, which represents the mirror image, this receivables ledger control account, I will clearly come here and I'll debit. So what did they say? Sales on credit. Why am I debiting? Because when I sell on credit, I'll credit sales, so the debit will come here. So the figure is 48,200 from here. The next, purchases on credit. Once again, when I purchase on credit, what's a double entry? I will debit my purchases account because purchases are debits, and then I will credit what the payables account or the creditors account. So debits to purchases, then the credit comes to this account, the payables ledger control account. So I will, so purchases has been debited, so the credit comes here. What's the figure? We have here 36,500. So 36,500. The next, I have what? Sales returns. Sales returns are the same as what we call returns inwards. What do we mean by sales returns? This is where you sell something to someone and then the person returns it to you as a business because they do not want it, they do not need it, so they want maybe a refund or they want a replacement. Now, sales returns have the tendency to increase a business's inventory. What do I mean? If I had 50 goods, I sold 10, so now I have 40. Then the person returns all 10 to me. What do I have now? I have 50. Agreed? So sales returns has the effect of increasing a business's inventory or stock of goods, which is assets. Because of this, sales returns, which is also known as what? Returns inwards, will have a debit balance. Debit because they increase the asset of what? Inventory. And assets are what? Debits. Inventory are debits and balances. So if I have sales returns, I would debit my returns inwards account with what? The figure of 1,900. Then, because it relates to sales, the credits will come toward my receivables ledger control account. So I just say sales returns of what? 1,900. The next is purchase returns. Purchase returns are also known as returns outwards. So this is where you go and buy something. You either find the good is defective or you just don't like it anymore and you return it to the person. Returns outwards or purchase returns have the tendency of decreasing your inventory. So once again, example, let me clean this. If I buy, let's say I had 40 goods as a business, I went to buy an extra 10 to get 50. And then out of this 50 goods, let's say you return 5 of them. Would you agree with me that your goods will go down to 45? So returns outwards have the tendency of what? Reducing the quantity of goods you have. And as a result of that, they have a credit balance because they reduce your assets of inventory. So if they have a credit balance, then it means the purchase returns of 1,900 here. Nope. It should be, let me map it well. Yeah, it should be 700. So the purchase returns of 700 we have here. We will credit the purchase returns account or we credit the returns outwards account. And because it deals with purchases or creditors, I'll have to come and debit the payables ledger control account. So my purchase returns of 700 debited here. The next I have is what? Discounts received from suppliers. Now, discount received is an income item. If you buy something and you're supposed to pay $50 and they charged you $40 instead, that $10 you saved is income because it's money you have got to keep. Since it's an income, and we know all income items are credits, just like sales, revenue, all of them are credits. If you have discount received is credit. If you have credited discount received, when do you get discounts? You get discounts when you are making purchases. It's when you go to buy something that someone gives you a discount. So if you get a discount and you've credited discount received, where will the debits come to? The payables ledger control account. So I come to the payables ledger control account. On the debit side, then I write discounts received of what? 400. Okay. The next one is what? Settlement discount claimed by a customer. This is known as what? A discount allowed. This is when you are the one giving a discount as a business. So when I sell to someone and I tell them, you know what? Don't pay me $50, just give me $45. I have allowed them a discount. You agree with me that that $5 I gave them is money that I have lost. So it's an expense. So discount allowed is an expense, and all expenses have what? Debit balances. So it means for a discount allowed, I will debit the discount allowed account, and then because it deals with sales that I'm making, the credits will go towards my receivables ledger control account. So they called it, let's use the name they gave it. They said they use the term settlement discount claim, but at least we know it's a discount allowed, right? So settlement discount claimed. How much was it? It was 300. Okay, this is 3. Let me write it well. So this is 300. All right, what's the next one we have? They said bad debts written off. So bad debt written off means someone owed you a debt or someone bought from you. They didn't pay you cash, so they were owing you, they were receivable. Then you found out that they are not capable of paying you anymore. Either they've deliberately made up their minds not to pay you, or they are not in a financially capable position to pay you. So maybe they've gone bankrupt or they've closed business due to, let's say, COVID-19. A bad debt is an expense because it will reduce, first of all, a bad debt to reduce your receivables balance. Because let's say if someone owes you 100 and they are not going to pay you anymore, you write off the whole 100, it means you have lost the receivable. So technically, a bad debt has the effect of reducing your receivables figure. So you credit your receivables account and then you debit the income statement with the bad debt expense. But let's not stress too much. For a bad debt, just know it's an expense. Expenses are debits. So I debit the bad debt expense and I come and credit my what? Receivables ledger control account. So I put here bad debts of what? 2,700. The next is what? Customer and supplier account settled by contra. Anytime you see contra, just see it as what? Corresponding entries on both accounts. So a contra entry simply means an entry on the opposite side of an account. What do I mean by opposite side of an account? Remember I told you the receivables ledger control account has what? A debit balance. And I told you the payables ledger control account has what? A credit balance. What it means is that if you want to enter a contra on the receivables ledger control account, it will be on the opposite side, which is what? The credit. Same way, if you want to enter a contra on the payables ledger control account, it will be on the opposite side, which is what? The debit side. So here, they are saying there's a contra of 2,100. All I need to do is come to both accounts. Give me a second. The figure is 2,100. So come to both accounts and enter 2,100 on the opposite side of the account. So let's say receivables ledger control account is a debit balance account. So where would the contra be? Opposite side is what? Credit. So I just write what? You can just write contra of 2,100. Similarly, the payables ledger control account has a credit balance. So where will its contract be? Its contra will be on the debit side. So I enter contra of 2,100. Take note, contra is the only thing that you have to do a double entry for, like you enter it twice proper. The rest of the things you can see, they just featured just once and that was enough, right? So that is it. I think I missed this. Good. All right, so we're almost there. What is left now is for us to do something called balancing off so that we get the balance for the account. So let's just draw up the totals here. Let's extend this a little bit. So we have our totals here. So all we need to do now is to add up. Now, typically, what will happen is that the bigger side will be the side of the account. So I'm expecting that for the receivables ledger control account, the debit side will have the bigger balance and the credit side of the payables ledger control account will have the bigger side. So let's just add up. You add 47,600 and 48,200. What does that give you? So calculator, 47,600 plus 48,200. That gives me 95,800. I put 95,800 here. Then your job now is to ask yourself, between 95,800 and all the figures listed on the credit side here, all of these figures here, what is the difference? So we are just going to add everything up and then subtract from 95,800. So let's add 31,800 plus 1,900. I'm adding the things on the credit side. So 31,800 plus 1,900 plus 300 plus 2,700 plus 2,100. That gives me 38,800 Then I subtract it from what? My 95,800. So minus 95,800. That gives me 57,000. So I put here 57,000 and I put here what? Balance carried down, and I'm done. So it means the balance on the receivables ledger control account is 57,000. And the question told us what? To determine the balances. So from here, we're told to determine the balances. So we've done that. The balance is what? 57,000. Let's do the same for the payables ledger control account. As usual, I sum both sides. So I know that here, let's start with the credit side because it's the bigger side. 37,400 plus 36,500. What does that give me? 70. Oops. That gives me 73,900. So I put 73,900 here. Then the same exercise we did. I will add all the things on the credit side and then subtract from 73,900. So 32,500 plus 700 plus 400 plus 2,100. That gives me 35,700. So I subtract that from 73,900 and that will give me 38,200. So 38,200 will be my balance carried down. So this is the balance on the payables ledger control account, and this will solve this particular question. Great. So we've done this. Let's do another question. So by the time we are done with this second one, then you know you really have everything under control. Before we continue, let me give you a quick recap of double entry. Remember I told you my approach to learning is to use problem-based approach. So we will take a problem and then we will break it down and use that to learn the topic. So when it comes to double entry, this is the debit side. This is the credit side. All assets are debits. All liabilities are credits. And I'm taking this from the accounting equation, which says what? Assets equal capital plus what? Liabilities. So what this means is that assets are on the debit side, capital and liabilities are on the credit side. So equal to sign will be the middle man. So it means all my capital or my equity will also have credit balances. Based on this, I know all expenses have debit balance. All sales or revenue will have a credit balance. All purchases have a debit balance. All sales have a credit balance. So here I should have used let me even change the sales here to income, right? Then if you want to expand it further, this is the framework you need really. So all assets are debits, all liabilities are credits, all capital or equity credits, all expenses are debits, all income credits or revenue credits, all purchases debits, all sales credits. For those who want to have something they can work with, you can even expand it and say your returns in what are debits, your returns outwards are credits. So that's why we were doing things the way we did in that question. If you want to expand it further, there's no point really, but discount allowed, discount received. Discount allowed will be on the debit side because it's an expense, really. Discount received is on the credit side because what is income in that order. So this is what you need to know. Then one outlier is provisions. All provisions are credits because provisions are liabilities anyways, right? So this is the table you need to work with by as a way of what framework. So if I say something is a debit, it means if you want to increase it, you debit it. So for example, assets are debits. To increase an asset account, I debit. To decrease an asset account, I credit. Liabilities are credits. To increase a liability account, I credit. To decrease a liability account, I what? I debit. So you just do the opposite side if you want to decrease, then you enter that same side if you want to what? Increase the balance. with that out of the way, let us do the next question, which says, extracts from the books of AB Limited show the following balances for the month of September 2012. So this is also a very old past exam question, but it's a good learning material because it has some things that are really good to pick up on. So we have balances. Let's go to the requirements. What are we told? They are saying that what? Prepare the sales ledger control account and the purchases ledger control account for the month ending 30 September 2012. So I have AB Limited, or it's best practice to always write the name of the company. I don't think I did the first time. So AB Limited. So let's open a bigger one this time. So my sales ledger control account. And then we also have our purchases ledger control account. Okay, so here, see what we are given. They said sales ledger balances as at 1st September 2012. You can see for the first time we've been given both a debit balance and a credit balance. So here, this is something new we are learning. It's possible for a control account to have two balances, but it's always going to be the case that the side that has the stronger balance will have the bigger amount. What do I mean? Sales ledger control account. Remember I told you this will have what? A debit balance. Purchases ledger control account will have what? A credit balance. So you can see because of that, this one has what? A bigger figure on the debit because it has a debit balance. Then this one will have a bigger figure on the credit because it has what? A credit balance. So all we need to do is just state what we are given. So sales ledger balances debit is what? 25,400. So I come here on the debit side, I write balance brought down of what? 25,400. They said credits is what? 500. So on the credit side, I write what? Balance. Oops, let me write the full thing. Balance brought down of 500. I do the same for the purchase ledger control account. They said the debit is what? 400. So on the debit side, I write balance brought down of 400. On the credit side, is 18,250. So balance brought down of 18,250. Okay, if that is the case, then let's go to the main transactions for the month. So as usual, like we did in the first example, same approach. First one, this will be faster for you because you've done it before. So purchases on credits of 100, 250. Remember we said that purchases on credit, how would you record it? Purchases are debit, right? So I debit purchases account, and then what do? I credit the purchases ledger control account. So I come here, and then what do? I write what? Purchases on credits of what? 100, 250. And before we even continue, let me show you something. Watch this carefully. In the first question, they called it the receivables ledger control account and what? The payables ledger control account. The second question, what did they do? They called it the sales ledger control account and the purchases ledger control account. Same thing, different names. So don't bother about the names, it's the same concept, right? Let's continue. Next is what? Sales on credits of what? 135, 720. If you sell on credit, what do? You credit sales because from this table here, I told you what? All sales are what? Credits, right? So sales on credit, I credit sales and then I what? Debit my sales ledger control account. So I just write here sales on credits of what? 135,720. All right, the next is what? Payment to credit suppliers, 85,000. Purchase ledger control account is what contains the list of my suppliers. If I pay them in cash, what will I do? I will credit cash, right? And then I will debit the purchases ledger control account to reduce the balance I owe them. So I come here and I just write payment to credit suppliers of what? 85,000 from here. The next is what? Checks from credit customers. So those who owe you are paying you in check. If someone sends you a check, what do? You debit your bank account because your bank balance will increase by the value of the check. So you debit bank and then you credit what? Your sales ledger control account. So you just write here, checks from credit customers of how much? 105,150. The next is what? Bad debt written off. We saw this in the first one. I told you bad debt is an expense, and it's an expense that relates to what? Your sales ledger control account or your receivables or your debtors. So bad debt written off, I debit bad debt, then I come and credit my sales ledger control account. So bad debt written off, what's the figure? 2,500. The next is what? Discount allowed. We saw this as well. I told you discount allowed is an expense. This is when you give someone a discount. So if discount allowed is an expense, what do? I debit discount allowed and then I credit my sales ledger control account. So discount allowed will come to the credit side here. What's the figure? 15,000. The next is discount received. Remember I told you discount received is what? It's income. So if discount received is income, it means I'll credit discount received. And then since I received it when I was making a payment, really, right? I will debit my purchase ledger control account or payables ledger control account. So discount received of 8,500. What's the next one? Returns inwards. Remember I told you returns inwards has what? A debit balance because it's to increase your assets, to increase your inventory, right? So it means returns inwards will be debited. And once I debit returns inwards, what do? I will credit my sales ledger control account. So returns inwards of what? 5,500. Another reason why you credit is when customers return goods to you, if they owe you an amount of money, they don't owe you that amount again because the goods based on which you are saying they owe you, they've brought the goods back. So returns inwards have the impact of what? With reducing the amount of receivables or debtor balance you have. The next is what? Returns outwards of 6,700. Returns outwards has a credit balance. So you credit returns outwards and then you debit the purchase ledger control account because once I return goods to a supplier, I don't owe them again. So I have to reduce the balance in the account. So returns outwards. Outwards is what? 6,700. The next is balances on the sales ledger set off against balances in the purchase ledger. This is the same that we saw here in the first question that they called what? Contra here. So it's either they say contra or the examiner says what? Set off. Take note. Anytime you see contra or set off, the same treatment. Remember I told you that you just put them on the opposite side of that account. So if it's a sales ledger control account, record it on the credit side. If it's a purchase ledger control account, record it on the debit side. Just memorize that as it is, that it will go on the opposite side. So here my set off which I said can also be known as what? Contra entry, will be what? 14,000. So I put 14,000 here. Sales ledger control account 14,000 comes here. I can just say set off. Then on the purchase ledger control account 14,000 comes here. And I'll say what? Set off. Take note, it's the same as what? Contra, if the examiner decides to use that term. The next is what? Cash purchases of 18,950. This will not feature in the control account. Remember, control accounts deal with what? Receivables and payables, debtors and creditors. People you sell to on credit and they don't pay you in cash, and people you buy on credit, you don't pay in cash. If it is a cash purchase, it has no business in the control account. You paid in cash, it ends there. So please do not record cash purchases. Let me give you one more tip that will help you ace your exam. If instead of bad debt written off, the question says provision for doubtful debt, please take note that will also not be recorded in the control account. So it's not that you just see bad debt or you see a debt and you're excited. No. If you see provision for doubtful debt, instead of the clear word bad debt, please do not record it. Take note, some questions can also write bad debt as what? Irrecoverable debts. So if you see irrecoverable debts, take note, it's the same as bad debt, so don't be scared. Irrecoverable debt is the same as bad debt. But if you see provision for doubtful debt, or as some questions may say, you see allowance instead of provision, the question says allowance for doubtful debt, please don't record it in the control account. Just skip it. The same way I saw cash purchase and I skipped it. If you see provision for doubtful debt or allowance for doubtful debt, please skip it. It is not supposed to feature in the control account. And the reason is simple. For those who want to know, I don't want to complicate things for you, but provisions have a credit balance. So it's going to be between a credit to provision and then a debit to the income statement as an expense. So it doesn't even pass through the sales ledger or the purchase ledger. It is independent of these two accounts. That's why you don't record such provisions. All right. Final thing they did is they gave us sales ledger, credit balance at the end of the month, and then purchase ledger, the debit balance at the end of the month. All they are doing here is to give us the minor. Remember when we started, both accounts had what? Small balances on the opposite side. So sales ledger had a small balance on the opposite side. Purchase ledger had a small balance on the opposite side. So we've been given those balances. But watch the question carefully. They said what? Sales ledger, credit balance at 30th September 2012. So they are saying sales ledger, credit balance is 5,000 and purchases ledger, debit balance is 4,500. Let me show you what they mean by this. So it means come and neatly, not this one. Close your accounts like so. Then here. Okay. They are saying for the sales ledger control accounts, credit balance is 5,000 at the end of the month. So it means on the credit side, after the month has ended, if you were to create a balance brought down, it would have been what? 5,000. You can see we are trying to follow the trend of what? This one. So balance brought down, balance brought down. So if the balance brought down is indeed 5,000, then it means the balance carried down at the end of the period would be 5,000. Because don't forget that in accounting, it is the balance over here that moves diagonally to this one. So it means technically the 25,400 here was also balance carried down in the previous period here, right? I mean, it's also always diagonal, right? So, all right. Now that we have this, let's also do for this one. So for the purchases ledger control account, they are saying the debit balance was 4,500. So on the debit side, I write balance brought down of what? 4,500. So it means my balance carried down here will be 4,500. So now that I have this, let's just go back to summing. So on the debit side, let's sum everything. I know that'll be bigger than the credit side for sure. So it's 25,400 plus 135,720 plus 5,000. That gives me 166,120. So I put the same 166,120 here. Then I'll have to, as usual, add everything on the credit side and subtract from this figure. So what is it going to be? 500 plus 105, 150 plus 2,500 plus 15,000 plus 5,500 plus 14,000. Then all of this subtracted from 166,120. What does that give me? It gives me a figure of 23,470. So it means my balance carried down is 23,470. It is the same figure that will come here next month as my balance brought down, 23,470. All right, let's do same for the purchase ledger side. As usual, what do? I add the bigger side first. So I add my credit balances. So this is 500. So I add what? 18,250 plus 100,250 plus 4,500. That gives me 123,000. So I put 123,000 here. Also 123,000 here. Then what do? I come and add what's the balances on the credit side. I mean the debit side. Yeah. So let me get this highlight off. Oops. All right, done. That was hard to do, so bring my comma back. All right, so let's add the balance on the debit side. So it's 400 plus 85,000 plus 8,500 plus 6,700 plus 14,000. That gives me 114,600. So I subtract from my 123,000 and that gives me 8,400. So 8,400 is my balance carried down, which becomes my balance brought down, 8,400 at the end of the period. So I have left a link to the downloadable PDF version of this question, both as a pinned comment and in the description box below. So download this, try to solve this yourself, both of them, and see how great you have become in this topic. So practice, 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 practice. Do it so many times until you become perfect. If you are lost, just go through this video again. And these are the two most paramount questions you must see if you are to understand control accounts. So as usual, if you don't understand anything, just don't forget, just leave a comment and we will get back to you. So as always, if you love this video, which I expect you to, please don't forget to smash that like button. It means so much to us. And don't forget to share this video within your entire network. I'll catch you in our next video.